ABSA Capital, providing financing, risk management and advisory solutions. ABSA Capital, born to redefine.
Structured finance was really at the heart of the financial crisis, and ratings agencies were to a large extent blamed for the poor assumptions on risk specifically. What sort of changes are we seeing on this front?
Oh yes, hi there, good morning. I mean, the good thing is to sort of step back a bit and look at the conference here, that this year, as far as the rating agencies are concerned, it's a lot less emotional. So we're getting a lot less criticism this year. But I guess for many in the markets, and this was a topic yesterday on one of the panels, the question still is, where are the rating agencies in that cycle of changing its methodology, of changing criteria, which often does have an impact on rated transactions in the market. And obviously investors are still worried about ongoing criteria methodology changes. But the message we were able to give really yesterday was, we are coming towards the end of that cycle.
Are you under pressure from regulators for these changes, Konrad? And really, how do you change your view of how you rate a structured finance product?
As far as the regulators are concerned, one could say, well, there will never be an end to changes, because, for instance, if you take what the European regulator is expecting from us, and we've been regulated in the European Union since September this year. Regulation will also come in South Africa at some point, although we don't know at this point how it will exactly look like. But the regulator in Europe is basically asking the rating agencies to review their methodology, their criteria on an annual basis, which doesn't mean you have to change it, but we are being asked to review it on an annual basis.
Of course, banks themselves have also come under criticism for some of those structured products that they did come up with, and a lot of them really quite opaque. Are we seeing a change to the way structured finance products are put together themselves as well?
I guess one sort of conclusion one can definitely draw from the subprime crisis and how securitization transactions, the volume in the market, and South Africa is not specific in that respect in any way. I mean, this is a global phenomenon. When you look at volume in the securitization market, it completely fell off a cliff. I mean, today we are talking about a sort of a fraction in terms of volume what used to be done in this market in 2007 before the crisis. And so going forward, the main sort of theme will be simplicity, will be transparency, and basically complexity, which was the name of the game before the crisis. Complexity is definitely out of this market.
Well, you say less criticism leveled at this conference that you're attending over in Cape Town. You're also saying it's less emotional at this stage. Are we seeing a growing appetite for securitization given the kind of changes that are being implemented?
Certainly during the conference, and also when you look at what has happened in the markets, in the South African markets in particular so far this year, we have some transactions, we've seen some transactions coming back actually. So there is a bit of life in the market again. But we are still far away from like where the market peaked out in 2007. Then in 2007 the market kind of peaked out in terms of annual volume of transactions over 80 billion rand. This year we have seen transactions sort of in the middle of like sort of 45 billion rand. So we're still far away from that. When you look at global markets, look at Europe, look at the US, I think the key issue with regards to a revival in the market still is that investors have to come back, or as they often call it, the real money investors have to come back. Because when you look at the structural changes in the securitization market, in particular again in Europe, is that the typical investors for structured finance transactions you had leading up to the crisis were the hedge funds, were the SIVs, the special investment vehicles, and they're all gone. So really what has to come back now is a new generation, a new class of investors, is the real money investor. And they are still not completely comfortable with structured finance transaction. And this still might also be true for pension fund trustees in the South African market, which are really, these are really the ones that make the call with regards to asset managers coming back into this market.
Well, what sorts of assets are being securitized, Konrad, and also the real money investors looking for? Because during the subprime crisis, of course, it was all those mortgages, subprime mortgages, that were being packaged up and sold. Is that going to be the case again, or are we looking at different sorts of assets being securitized?
We do not necessarily look towards or to sort of different sorts of assets. It's really what the investor wants to see is, like I said before, is simplicity, transparency, and that transaction can be sort of looked through, and the rating can be sort of replicated and all this. But in terms of assets, what we have seen so far this year here in South Africa and elsewhere are typical asset-backed loans based on auto loans, for instance. Retail mortgages are back too, and retail mortgages, RMBS transactions as they are called. It doesn't necessarily mean these have to be subprime as it was the case in the US, where the markets really did not perform. I mean, South Africa has a long history of RMBS, retail mortgage-backed securities transactions, and they actually, during the crisis, they performed as they should have done. The same for Europe. So yes, in terms of the assets we are looking at retail mortgages, maybe slowly coming back commercial mortgage-backed securities, and then auto loans, credit cards. That's all going to happen. But again, what investors want to see is simplicity. Investors also want to have more data. There's a huge discussion going on these days about like how much loan data we have or the market has to provide to investors, and also regulators are asking for this kind of disclosure, basically, as far as data is concerned.